Ladies and gentlemen, let's get straight into this video, you guys. Today, we're going to be talking about what moves the markets, you guys. What moves NASDAQ, right? Why do banks need liquidity to make big moves? If the market is random, why does price always react at the same levels? And why does price always hit your stop loss before moving in the direction that you already knew it was going to move in the first place, you guys? So those are just some of the main things that we're going to be talking about today in this video. We're going to pull up a chart right here. Now, it is Christmas Eve, right? Which is a Wednesday. So I don't think the markets are open, at least not the NQ. And if the markets are open, it's probably not really giving us that much movement, which is fine because we really don't need the markets to be open to make this video, right? I like for the price to be moving sometimes when I do these videos. So let's pull up our chart right here, you guys. And, I want to focus on what moves the markets today, right? Let's talk about what moves the markets because I think it's important to talk about liquidity, obviously, if we're talking about what's moving the market. But some of the information I'm going to give you, it may sound like conspiracy theory type stuff, honestly, but this is just my opinion of what moves the market. All right. So first, I want to say I do not really believe in fundamental analysis that much. I don't really believe in news drivers, and the reason why is because I don't really feel like news really moves the market as much as everybody thinks so. I think it's just a way for the smart money, right? For the big money people to A, pump a narrative, and then B, it's a way for them to get people involved, right? Think about if there was no news in the market, right? I mean, what would people even go off of, right? Like, what would people even care about if there was just no news in the market? Like, would people even care about what's going on? So I think the news is just a way to get people talking, a way to get people, caring and to get their emotions involved, right? But for me, I like to talk about liquidity, right? Because I truly do feel like liquidity is the thing that moves the market the most, right? And I'm going to give you guys some examples in this video today. So here we have our NASDAQ future chart put up, right? And this is the 4-hour time frame. So just looking at this chart, you guys, I'm going to talk about liquidity for a second because just looking at this chart, I want you guys to be able to pay attention to some things so that you can learn how liquidity works, all right? So first thing first, right? Now I want you to notice whenever you're looking at a higher time frame chart and you see a really big candle like this, I want your eye to always go to that really big candle, right? Always, pay attention to this because it's likely going to be very important for a price, right? Like if I was to measure this box out, let's just put a box on here, right? And if we look at the midpoint of that box, which is right here at this little line, look at how price came right down to the midpoint of that box, and then we continued away, all right? But that's not what we're talking about. That's mainly for a different lesson. But I just wanted to tell you guys, if you're a new trader, always, if you see a big candle like this, especially on the higher time frames, we are on a 4-hour time frame. So I would like to consider that to be a higher time frame. Always make sure your eye goes to that, right? Because today we're going to be talking about liquidity, right? So in order for you to understand liquidity, there's two things you need to understand, right? There's something called a liquidity sweep, and then there's something called a liquidity run, all right? So I'll give you an example. Let's look at this random high right here, right? Let's zoom into our chart. All right, let's zoom into our chart. So we're looking at this random high right here, right? So notice how at first we was looking at a swing high right here. And if we was trading this market, this would have been an area that we was looking for liquidity, right? So notice how when price comes up here, it sweeps liquidity the first time. And the reason why this is qualified as a sweep is because look at how the body of this candle still closed below the top of this swing high, right? So that is a liquidity sweep. And a liquidity run is where a body, right, the candle, right, the actual body of a candle closes above this swing high or this swing high, right? So if we look over to the right, and then if we put a line, if we put a line on this high right here, notice how we swept it once right here, right? We swept it again up there. And then right here is when the body closes above this swing high. And then notice how after the body closes above the swing high. So like I was saying, you guys, if we're looking at the 4 hour time frame and we're looking at this swing high right here that I have in this bubble right here, and I also put a yellow line, you guys can see that price came up one time, right? We swept that liquidity, had a rejection, targeted this liquidity on the downside, came back up again, swept this liquidity again, right? Wasn't able to close the body. Then we came back and swept this liquidity again. And then on the third time, notice how the body of this candle, right, closed above, and then that is when price decided to keep going up, right? So even in this one example is essentially how liquidity works in a nutshell, you guys. And this is how you can start learning how to understand where the market is going to want to go just off of these basic concepts, you guys. So obviously, if you see, you know, price sweeps liquidity, think about it as, using the same logic as we use to, figure out a daily bias, right? When we're trying to figure out daily bias, we're looking for price to break out either the previous day's high or the previous day's low. After the price breaks out of the previous day's high or low, the next thing we're going to be looking for is what does the market wants to do, right? Does it want to continue to go in the direction that in which it was going, right? So let's say if it breaks out the high, do it want to keep going higher? If it breaks out the low, do it want to keep going lower? If it doesn't want to do those things, then we only have two options left, right? It's either going to go in the opposite direction or it's going to consolidate for the rest of the day, right? And the reason why all of those things are important is because this is how you also build narrative for daily bias, but you also use this just pretty much every time you're trading to read price, right? So, given, so I'll give you another example, right? If we're looking at this swing low, notice how the bodies, right? Now, if this first candle right here, notice how if this first candle right here, this was a sweep, right? This was a sweep. This was a sweep, right? The bodies of the candles did not close below this swing low. But then once we get this candle right here closes below, that's going to give us an indicator that, hey, this right here is becoming an order block. And as price goes all the way back up into this high, we can be taking that for a sale position back to the downside, right? But I wanted to show you this because some of you may look at this and say, well, based on what he just told us, right, this isn't true because the prices closed below this swing low and then it did not keep going to the downside, right? That is when you have to, start to use more information, right? So one of the things I would do is I will update the low that I'm looking at, right? I will, instead of looking at this low, I'm going to start looking at this low, right? But obviously, like I said, there's only three things that can happen after we break past a low or a high. It's either going to keep going, it's either going to consolidate, or it's going to go in the other direction. In this example, you see it consolidated for a while, then it went in the other direction. All right, so what was it going to target up here when it started to go in the other direction? Well, there's some highs up here that is still wanting to target, right? We still have this swing high in mind, right? So obviously when we get up here and then we sweep this liquidity, right? Because we're waiting, right? In real time, this is the 4 hour chart. So we're waiting for these candles to close, right? This candle started at 6 a.m. and we're going to wait for it to close at 10 a.m., right? And this is the reason why I like to wait 30 minutes until after the market is open because it gives you more information. So let's say we waited 30 minutes for after the market is open. This candle closes, right? Obviously, if this candle would have closed, then you just missed the whole move, right? Because this is one big 4 hour candle, right? So this is why you have to kind of also be aware of this, because you can look at the previous 4 hour candle and see, okay, this one swept and closed weak. And now this one, if this one goes and sweep this high and then it starts to be all the way down here, right, hundreds of points away, you could just assume that this one is going to close weak as well. And then we're going to target this low, right? But essentially, you want to be looking at these things because you want to know what's trying to fake you out and what's not trying to fake you out. Because, if you're getting faked out and you're thinking that price is starting to reverse, right? Maybe because, you had a swing high right here and then you see this swing high and you say, look, price swept this at first, but then it ran out the liquidity next. So it's starting to go higher on a shorter term basis, right? Because you do have 4 candles right here, 4 hour candles, which is what, more than a half of a day of price action, right? So on a shorter term basis, you was right. Price did keep going up, but you have to always continue to go into your charts and look for this liquidity and see what has been ran out and what has only been swept. All right. So this is a very key lesson, and that's why I wanted to make this video number 2 in the course, you guys, because like understanding this is everything. If you don't understand what I'm talking about right now, I would suggest you not to use any more real money when it comes to trading, because if you don't understand these concepts, then it's going to be a real struggle for you when it comes to, picking a daily bias and understanding higher time frame liquidity, you guys. So make sure y'all drop a like on this video. That's going to be the end of the video, you guys. Make sure y'all subscribe, turn on that bell for me, and I will see y'all in the next video, man. Peace out.